Okay, this is our follow-up on dry ships and how we handled it today. This is a free pick that we sent out last night. Again, we're sending out free picks in video format from now on so we can better explain what we're looking at. Dry ships we wanted, if it broke, what day is this, Wednesday? If it broke Tuesday's high was 587. So we wanted it if it hit 588. We thought that would be enough momentum to take it to and hopefully through this 618 high and maybe get some kind of a short squeeze. But today, dry ships ended up starting off weak. Let me switch to fives. We actually did make a call on this morning. 5-minute candles here. You had 2, 3. When it put in this green candle here, we called it on a break of this 5-minute high, thinking if it broke this 5-minute high, we could get a run back to the high of the day. And if it broke the high of the day, all bets were off as far as shorts were going to be in trouble. So we tried it on a 5-minute break. We typically don't trade in the first 30, but on dry ships, the trigger was a break of this first 5-minute, the first break, I'm sorry, of a previous 5-minute candle's high. The high of this one was 542, so we called it at 543. We put our stop below the previous candle at 522, so a 21-cent risk. A little higher than we like, but gave it a shot, and you can see it triggered and rolled right over and cost 20 cents per share. It got me. I really thought dry ships could turn and run. Shippers were generally weak today. Now, that said, the daily is not completely invalid, okay? We still are going to keep an eye on this. And this example of that would be SLG. We called SLG for yesterday, and see it put in a red candle like dry ships because we liked it above this area. If I put a kind of horizontal line there above recent highs, it had this strong day, and so we were looking for a breakout, but that was yesterday, and it put in a red candle. And so took it off the watch list, and then look what it did today. It finally got the breakout a day late. It happens to us sometimes. So just that's an example of why we're not going to pull dry ships off of our streamer. We're going to keep an eye on it. And if we can break any kind of recent high, we're going to be all over because I still think it has a chance. Now, the reason we don't buy it today, now down here, so we can get a cheaper price before it breaks out is we don't know if it's ever going to break out. This one could open tomorrow at $3.60. We don't know. So it's just easier not to hold overnight and hopefully try to catch a momentum play on it one of these days. Still like the daily, but again, not gonna hold it overnight. It's just not worth it because we have no idea where it's going to open up. Today we did have a couple of decent plays. I called a CSX today at 30.59. Let me go to fives and show you that. It was very strong early. Actually, let me show you the reason we liked it first. They had earnings this morning. Well, look at the 2 days. This is a daily chart. The 2 days going into earnings, both red candles. In other words, people placing their bets short that they're going to have bad earnings. And everyone who shorted this from 2 days ago and yesterday wakes up this morning and every one of them's in trouble. So we liked the idea there, but we let it trade, and it hit an early high of 30.58, came back down. It was pretty whippy, but when it started to gain momentum again, like for the third try at this high of day, we called it, toned it in chat right around 30.48. We said 30.59, break of its high, we're in. And I actually got filled at 30.60, and literally within 10 minutes, it's up almost $1. It's up to 31.49, and ended up going all the way later to 31.68. So real nice pop. Totally made up for dry ships for me, and and then some. I made almost $1 there on some of my shares. I always scale out, what we teach our members. Sold some quickly, probably right here, sold some more, and just kept scaling out as it kept going higher. So once we have a gain, we go to a break-even stop, and we don't let the second half or second third or whatever cost us any money. So pretty safe way to trade. Dry ships a bit of a gamble trying that on the fives today, but we did try it. Didn't work. We also had one other one, Halliburton. Let me switch to 30-minute candles to show you the setup. We already had it on daily watch. We thought it was pretty strong. You have the first candle, lower top, and another lower top. We called it on a break of this candle. The high was 17.69. So the 17.70 trigger. Stop went 17.49. So a little over 21 cent risk. And within 5 or 10 minutes, we were already out some and a break-even stop. And so from 17.70 went to 18. Not a huge gain, but on 1,000 shares, quick potential $300 there. And again, the stop went to break-even pretty quick. So really nothing huge today. Not too hard to show you why. This S&P line there, the red line is the market today. Basically the S&P. Let me switch to 5s. This makes it a little clearer. Quick run early, then a sell-off, then another pop higher, and then when the beige book came out, it popped, and then took out the recent lows. This is all intraday action, and then just ran the rest of the day. So very whippy. When you see it breaking, breaking recent highs and then breaking recent lows, it's like a widening pattern there, and it just shows indecision and makes trading very hard. But still had a very nice positive day. And matter of fact, my only loser was DRYS for 20 cents a share. More than made up for it with others. So keep DRYS on watch, and we'll send out another free pick next week. Have a good evening.